Hey everyone, welcome back to our channel. Did you know that if you're self-employed, a freelancer, or earning income without tax withholding, you might need to pay estimated taxes? Let's break it down. Who needs to pay estimated taxes? In the US, taxes must be paid as you earn income. If you work a regular job, your employer withholds taxes for you. But if you're self-employed, an independent contractor, or earning extra income on the side, you're responsible for paying taxes yourself. This is called estimated tax. Who does not have to pay estimated tax? You had no tax liability for the prior year. You were a U.S. citizen or resident alien for the whole year. Your prior tax year covered 12 months. Also, if you receive a paycheck, you can adjust your W-4 with your employer to have more tax withheld instead of making estimated payments. When are estimated taxes due? Estimated taxes are due 4 times a year. April 15th, June 15th, September 15th, and January 15th. If you miss a payment, you could face a penalty, even if you get a refund later. How to avoid penalties? To avoid penalties, make sure you pay at least 90% of your total tax for the year, or pay 100% of last year's tax bill, whichever is smaller. And if your income isn't steady throughout the year, you can adjust your estimated payments accordingly to avoid paying too much or too little. Tracking your payments can help you stay on top of your taxes and avoid surprises at tax time. SK Financial CPA provides professional tax services to ensure you stay compliant and maximize your deductions. Visit SK Financial CPA today to get started. If you found this video helpful, hit the thumbs up, subscribe to our YouTube channel, and share the video.